Welcome to the Daily Insight with Olivier Giraudo. Every morning, we take the biggest global headline out there and chat about what it means for small businesses just like yours. Now, we're not making the news. We're just making it more exciting and relevant for you. We're two entrepreneurs who love turning big headlines into practical insights. By the end of each episode, you'll have 3 takeaways you can really use. So let's dive in and have some fun.
The Federal Reserve appears set to cut its benchmark interest rate by a quarter point to the 3.75% to 4% range, amid mixed economic signal and worry about the job market. While the move signal flexibility, the Fed is described as being in the fog because of incomplete data, making the decision more about managing risk than celebrating strength. This kind of policy shift send important signal to small business owners about borrowing cost, consumer demand, and how to plan ahead. Good morning, everyone. Olivier Giraudot here, and welcome to our Daily Insight. Today, we uncover the fact that the Fed is likely to reduce interest rate soon, a development that's highly relevant for small businesses. It's a prime example of how monetary policy and economic uncertainty can shape the landscape for entrepreneurs and small business owners. As a professional courtesy, we offer 3 key takeaways from Todd that you can consider at the end of the podcast, purely as informational insight, not professional advice. So stay tuned as we dive deeper and keep our conversation engaging. Good morning, Todd.
Good morning. How are you today?
Doing great. So we have almost the same news from a few days ago about the interest rate. So how it will impact the small business world?
Look, lower rate cuts can decrease and reduce borrowing costs. I mean, that's what it comes down to. Smaller businesses seeking loans or lines of credit, quarter point, another quarter point. We had one just a month ago. And if this comes through, which it is expected to come through, it would just be even better news for borrowing money and also seeking loans for lines of credit.
So let's go jump on the question for our audience. And now let me invite you to share your thoughts. We truly value your input. So please join the discussion by commenting on any of our platform. Here is the question for you. How do you plan to leverage or respond to potential change in interest rate and economic condition for your business in the coming month? So, Todd, let's go jump on the first question. Here we go. What impact could a Fed rate cut have on your business borrowing strategy?
Well, one good word comes out, and that's flexibility, financial flexibility in particular. Now have options. You can stay where you're at, or you could try to refinance, or you could look for items to help grow your business, such as new equipment, take on some new labor, some new hiring decisions. All of this is good because it's allowing you to evaluate your financial flexibility.
Thank you. Jump on the question number 2. What economic signal should small business owners monitor now?
That's a good question. Couple of things. Wage growth and job market trends. That's important. Trends in consumer spending. Look, we see it all the time, but now especially we're getting into the holiday season. You're going to want to go out and you're going to buy things. You're going to buy, which means you're going to have debt and lower credit card interest rates, lower refinancing of your home mortgage, refinancing your SBA loan. All of these things work good because they also lead to lessen inflation and pressures are off, which is always good. And then lending and credit access from banks. All of this is just points in the confidence indications that we're heading in the right direction.
Right. I think we're heading to the right direction for sure for the end of the year. So how can you prepare for demand uncertainty amid incomplete data? I think we answered this question yesterday, but let's go answer this question again today.
Well, explore new revenue channels. Look, you make your money one certain way and you're good at it, or you find other opportunities along the way. So you could broaden your horizon, take on new opportunities for your company that make financial sense, strengthen, your cash flows and identify any kind of cost optimization opportunities. Those are obvious. They're kind of glaring, those things are, but you want to do one thing and you always want to retain your core client base. You want to always retain your customer base that's been loyal to you.
Jump on number question 4. What opportunity may arise in a lower rate environment?
Well, right off the bat, easier access to credit, whether it be you want to grow your business, you want new equipment, or you want to prep your business for a sale. That's interesting too. That's another conversation.
And we will jump on that, guys, because Todd is a broker. And if you, in one point, wants to sell your business or buy a business, please contact us. We're going to put Todd's phone number. Then you can reach Todd anytime.
Also, consumer willingness to spend. We watch their pennies and nickels and dimes as consumers, especially as you get into the holiday season. We see what's going on around us. We watch inflation numbers. We want to make sure we can get the best bang out of our paychecks week after week. Feel bad for some people that are government employees. They're not getting a paycheck at this point. But what you got to do is, now that you've got a rate cut, look, your credit card, if you've got debt on your credit card, that can go down also. So all of this increases the willingness for customers to spend, especially as we get into the holiday season.
Yes. And here we go. The last question for today. What risk should you watch for even if rates come down?
Well, over leveraging. During optimistic times, we tend to over leverage. And what I mean by that is you go out, you buy multiple items that you might not really need.
Right. We have to be very careful.
So you have to
It's very careful.
Be sure that you're spending within your and you want your, make sure that inflation could offset lowering borrowing costs. Demand still may be weak. I mean, this is just news. It's all it is news. It's all.
And news change every day, as we know that for sure. So thank you, Todd. And now let's go jump on the free takeaway. So before we conclude, here are 3 professional insights for today's discussion that you can reflect on.
Well, you want to use this moment to invest strategically. Just because you got a lower point here and a lower point last month, 25 basis points, right? Doesn't mean you're going to go out and buy everything in sight. It's basically cheaper financing, right? So you want to strengthen your business through this opportunity. Focus on demand and your cash flow resilience. So you want to be able to, even with lower interest rates, you want to make sure that uncertainty remains in your business, that it's lean, that it's flexible, that you're prepared, stuff like that. And lastly, be proactive. Review your financial needs. And what better time to review them is now? You just had a federal rate cut. That becomes an opportunity to evaluate any upcoming borrowing that you might feel makes sense for your business.
Yeah, thank you, Todd, for your always from your inside. And now that concludes today's session. So let's keep the dialogue going and continue to support each other like every single day. Remember, every challenge can be a catalyst for innovation. Stay informed, stay resilient, and let's be ready for new opportunity. See you all tomorrow.